2015 to 2025, the last 10 years, it paid over 162% in dividends.
Wow.
Yeah.
That's actually crazy.
You need to look at yield, but yield isn't the only thing you should look at, because you should also be evaluating the actual business. So year to date, how have some of the dividend payers been doing? Some companies, for example, they may be doing better now, but they weren't always so hot, or they were hot before, but now they're not really doing so good. The highest based on this is the CPFV, Epic Caribbean Property Fund. Then GHL, which is Guardian, that's second. Carreras is third. This year, I've got some dividends that I was able to do something pretty nice with it.
I want house money. Yeah, man. And boat money.
Hi, guys. My name is Matthew Preston, and this is the Limitless podcast. Joining us, as always, is your co-host, Dr. Thaon Sims. Hello to people, Thaon.
Hey, guys. What's up?
Yeah, and today we will be having a discussion on, I think, everybody's favorite topic, dividends. I know everybody loves... Yeah,
everybody loves dividends.
Yeah, everybody loves dividends, huh? You don't
That's
love
how the
dividends?
show goes. Yeah, why not? I like cash, so I like dividends. Why not?
You got any dividends recently?
I have, Did I get dividend? I don't know. What do you call recent? In the past, how many months?
Quarter?
Last quarter, I think so. No, I didn't. I didn't get any dividends this quarter. Oh wait, no, I did. How did I forget? I guess we'll talk about it a bit later. That company, because I'll bring it up a bit later. So, guys, if you want to see which company it is that we've gotten dividends for, just hit that subscribe button. We'd love that. We'd really appreciate that, because we have a goal for the end of the year. But yeah, I think dividends are cool for me because it's just the surprise cash that you get in your bank account. Shout out to people that sign with their brokers the document called the dividend mandate. All right, because the dividend mandate would allow you to receive dividends directly to your bank account. So it's like a direct deposit. Back in the day when I never used to have a dividend mandate, I'd get the check in the mailbox and I'd never really clear that, because it used to only be like, there are companies that used to pay me like $30 JMD and so on. So some of those I used to just let pile up and just, that's not a sign of wealth. I'm not rich, but I think it would just take me more than $30 JMD to sort out that check. So I'm just like, leave it alone. But free limitless advice, sign that dividend mandate and the dividends flow directly to your bank account. And it's a nice like a surprise if you're not active enough to see when the dividend date is coming, when they're going to declare a meeting, all those other things. But yeah, I do love dividends. How about you? You like dividends?
Yeah, it's nice sometimes just get some cash, Yeah, you can try to time some that you're selling the stock around that time, and then, okay, I have some cash, I can spend it to something or reinvest it in something else. But, say there was already a reason that you're going to own the company. Like, say, I thought the share price was going to rise by 30% in the next year. Imagine, okay, you're in there and you're happy with that return, but then you're also getting 3%, 5% on top of that, Or we're supposed to even getting more, Imagine getting a 10% dividend and then a 30%, 50% movement. Yeah.
True. That's always nice. Yeah, it's like one of those added benefits for me when I look at a stock. Just do they pay dividends or not? I think that's always a really good point to make, because what have they historically paid, right? What's the business doing now? Do they expect future profits? And do the profits usually trickle down into those dividends?
Or do you expect future profits too?
Yeah, do I
Not
expect
just
future
them.
profits?
They might think, yeah,
For
we're going to
sure.
be profitable, but you're like, hey, I don't think that's the case.
That's very true.
I don't think
So you should
so.
always do your research. Agreed. But I think it's good because it's just like one of those things that you tick off. Like, okay, yes, this company can possibly give you, as you said, maybe that 30%, maybe that 50% move. That's your play for the year. But then they also pay dividends. That's a bonus, right? Because that's some you may get cash flow now, and based on the type of dividends that they've paid historically, you can probably work out, okay, if they normally pay this, let's say the company doesn't make more profits and they just they match what they made last year, right? What can I approximate the dividend to be like? What can I expect based on my calculations? And if it looks good, hey, by all means buy that stock, you know. So I think it's cool. And the added thing would be sometimes you can get capital gains because of the company paying dividends, right? You can see a movement in the stock price sometimes when companies consider a dividend. Maybe a company is not known to pay dividends, and then they say, I think we're going to finally start to consider a dividend. Remember Carb Cement? Carb Cement, I believe, is a very, very good example of that. Because for years, I think maybe like a decade, I don't think Carb Cement paid a dividend because they were paying off the debt. They had a really large debt when they built out,
I think it was like to upgrade the factory.
No, I think it was Kiln 5 that they borrowed money from and then they've just been in debt for a long time, and then I think they refinanced the debt and all of those kind of stuff. But they paid their first dividend. Was it like 2 years ago? I'm trying to see if I can find it. But they paid their first dividend in a long time. And you could see a rise in the stock price around that time. Oh, I'm actually looking at it now. Yes. So this is the year of, when did it start moving? So if you look from January 2024, right? So, this is after COVID now. Wait, I might be off with my timing because I can't recall a dividend before COVID. So I could be wrong. But, COVID is, it's a bit better controlled in the country. I think it's 2023. Here we are. I see it on the charts now. Dividend record date this is August 2023. And at that time, they were, more profitable. They were doing a lot with the company. And they said, all right, we can start to pay a dividend. And you can see the stock price starting to move up. I'm trying to see if I missed a dividend earlier, but I can't recall a dividend before COVID. Can you?
No, I don't think so.
I mean, they must have paid it way before COVID, but yeah.
No, I was doing some research here. You brought me to Carb Cement. Oh, I should probably share it. This is like a Gleaner article from 06, where they actually mentioned the upgrade. Apparently it was 134 mil US at the time. It was 03 they were starting. Q1 03, and then they said their goal was to complete it in 2008.
And my bad, my apologies. The dividend was actually 2021. So they announced the dividend. There's some notes here where, they announced the 30% upgrade. They also announced the dividend policy committee. This was like July of 2021 and so on. And you could see the stock price moving. The stock price at that time was $94, then went to a high of 117. Yeah. But before that, it was rising because we expected stuff like this. So from May 2020, from January 2020 and so on, COVID came, but then it started rising, bottomed out close to like $40, $45. Then it started moving again. But I remember a lot was going on for Carb Cement at the time. in terms of, them becoming more profitable, them paying down a lot of their debt. I think that was the major thing. And then, when the company becomes more profitable, a bit more cashy, they say, all right, maybe dividends could be, a reality. And a lot of people bought the stock based on that kind of expectation as well. So I wouldn't say, well, for me personally, dividends don't matter as much, but a lot of people do put a lot of focus and emphasis on dividends when they're picking their stocks. So that in and of itself will drive up demand for a stock. So just looking back at Carb Cement and the timing when a lot of these things happen, I know I might have had some of my dates or timing off, but definitely the dividend was, one of the selling points to say, all right, Carb Cement looks pretty attractive. And it wasn't just to me, it was to a lot of people. So you could see a movement in the stock price because of that. So dividends, pretty important. Pretty important. Worse if you have millions of dollars, to invest. Because then your dividends looking nice. Looking very nice. Yeah. But that's just one of the stocks about dividend. I don't know if you had any other stocks that you liked you liked a particular dividend,
so
maybe in a particular time.
what I should say is that what kind of got me thinking to do this episode was that almost everyone, wants dividends. A lot of investors talk about wanting dividends, and there are a lot of different things, I guess, to look at when you're trying to pick like a dividend company, because there's all kind of different companies, different business models. Some of them are, you'd say, like more resistant to stress, and like something like a Carreras or a Transjam, you'll get pretty consistent dividend, or the profit doesn't, I guess, fluctuate necessarily that much for the companies like that. So people say, oh, or there's always demand for those kind of services, I guess. And so people say, oh, I'm going to put my money in this dividend company, but then you always have to kind of think, yeah,
like
I guess
they deal with a lot of cash.
Yeah, they get
it's
their
not
payments like up front. They have to wait a while or that long, I guess.
I was thinking, as opposed to another type of business, like if it was real estate, because if the company is like a fund that invests in real estate, you may not, depending on the type of real estate. As for instance, like if you're flipping houses, you may not have cash flow like that. Or if you're developing to sell, your exit is at that point. It may not be like the rental model where you get in monthly cash flow and so on. So it may, certain types of businesses, I would say, don't want to use the word are prone, but they will likely, or it's more likely for these kind of businesses to pay dividends because they deal with so much cash. So
yeah.
But you had a point.
Yeah, sorry. So basically, I was just saying, one of the things I think we should look at would be the yield. So you look at the yield that you're buying at. So, okay, I'm buying this because you could buy a company at $10. You buy a company at $100, and you could be getting more in dividends of the company, or like a higher return on your investment in terms of the amount of dividends the company pays you in the $10 stock. Or you could get you could get it in the $100 stock. It's not just the price of the stock, the nominal value. It's really like, okay, how much dividends are they paying per share? How many shares are out there? So if you don't really talk about yield, it's like that's an issue. So if you're saying, hey, I'm a dividend investor, it's like you have to be thinking about the actual companies. Because it's weird because you need to look at yield, but then it's like yield isn't the only thing you should look at, because you should also be evaluating the actual business and the fundamentals of the business. Is their money are they going to be around for 5 years? Are people going to keep smoking cigarettes 10, 20 years? Or if it's not cigarettes, maybe it's vapes or whatever other version, It's like, do you think that will still be there 10, 15, 20 years from now? Then, hey, Carreras isn't bad for you. Or do you think that, Portmore is going to be developed a lot more in the next 10 years? So then something like a Transjam. But yeah, so the point what I was doing was that, so big up My Money JA for this. So on the platform, it's like you can rank the dividend yield and you can pick different time periods. So I tried to look at some different time periods, because something that's the best for like maybe over the last year, or the last 3 years, maybe a few years before, it wasn't really doing so hot. So if you had really bought it from back then, it's like you maybe wouldn't have got a good amount of return, versus some that are now changing. And so if you're a dividend investor, if noticing that pattern, you could kind of shift towards those, So it's not just, hey, I'm just going to buy it and lock my eye and not even actually meds the business. Is there a change going on in the business? Things like that.
Oh, you're talking a more long-term investor that's looking at
Not just
dividends as a form of making a return on their investment.
Yes.
So they care about dividends. So this scenario hypothetically is just, if you're investing for the long term, whatever that means, but over a year, 2 years, maybe 5 years, right? You want to pick a stock that will possibly consistently pay dividends, and they could probably go up or so. Like, is that what you're saying? I'm just trying to be on the same wavelength as you.
Hold on.
Because
what I'm
you're
saying is that
it's important to look at the yield.
Yeah, but then also the actual business itself.
Okay.
So I guess you'd say, the fundamentals of the business. Is it something that people are still going to need? Can they raise prices every year and combat inflation? Yeah, is it something that's going to be around 10, 20 years from now, if you're actually thinking, 10 years from then? So yeah, essentially I was just ranking some different time periods. So I was looking at year to date. So we're recording this August 2025. So this would be Q3 2025. So year to date, how have some of the dividend payers been doing versus, or based on their yield? Then over the last year, so beginning of 2024 to the end of 2024, then I think the last 5 years or something. Basically, I was looking at the different time periods. So you can do that with my money J. You can do so for example, 2024, beginning of 2024 to the end of 2024. And so I tried to look at that because it was interesting, because some companies, for example, they may be doing better now, but they weren't always so hot, or some they were hot before, but now they're not really doing so good, so that was
I'm wondering, is that dividend yield based on an average price? Like, what do they use for the stock price?
I think it is the
current market price.
No, the yield for these time periods, it worked out. Okay, each dividend that was paid since that time period, and
meaning
I think it works out to the current market price then.
Okay, meaning on X date, like let's say they paid a dividend August 1, 2024. You're saying the yield would have been based on the stock price on August 1, 2024.
Wait, actually, I'm not sure. So I thought it was, if you just tracked it, so if it started at the beginning of 2022, and then they paid out a dividend Q1, interesting. I'm actually,
I don't know why I thought to ask that, but yield is a function. And for guys, if you want to watch a lot of our dividend videos, this is gonna be in our dividend series. So we broke down dividends in a lot of videos before. Well, maybe not a lot, a couple. But if you want to get like an understanding about dividends and so on, check out those videos. We'll leave the link in the description. But it's just a thought, because what's the yield based on? But I think this is as accurate as we can get, because using anywhere else like JSE data and so on, it would be a lot rougher. So fair. And clearly you did a whole table on this. This is interesting.
Yeah. So I was looking at the different time periods. So let's say first year to date, the highest based on this is the CPFV, which is I think the Caribbean Property Caribbean Property Fund. Caribbean Property Fund. What's the V then?
I'm not sure.
Yeah. And I think they own like a lot of different. I think it's a real estate fund. Then GHL, which is Guardian, that's second. Carreras is third. AMG packaging. They make a lot of like cardboard packaging and other stuff for some other like manufacturers. Then Indus Pharma, Dolphin, Cove, Signos USD, Epley, which is another, I think they're another real estate company, most unaffiliated, Trans Jamaica, and then Lasco Distributors. Those are the highest paying year to date. I think it's good because you remember, okay, it shows you that the kind of options that you have. So I guess if I was a dividend investor, I would try to probably automate something like this. So I have an idea of the different yields that I could get, because sometimes, suppose you're trying to build a true dividend portfolio, then it's like, hey, if this company just paid me a dividend, sometimes you could reinvest it. I guess it depends on how you want to structure it. Are you going to reinvest the money, or are you going to spend the money and say, hey, I'm going to do this or do this trip or buy this thing for me? But say you're someone who wants to reinvest it, if you know what the highest yielding companies are, and you should obviously do your analysis to say, oh, how do you understand the business? But then suppose a dividend investor could be selling this company when they say something really good is happening to the company, the share price is flying. They could sell some units, and then they could say, hey, what company is paying like a really nice yield now? Oh, Carreras is dropped to this price. Okay, let me buy some more because the yield I could get is 4.8%. Or they could say, hey, AMG has a dividend coming up. And you could also even time it in terms of dividends being announced, because if you really want to get the dividend, and sometimes the amount of dividends that these companies are paying can beat your fees if you have low fees, you could just say, use that cash from another dividend play and then put that into this other company. And then the other company announces a dividend. The share price could even move. Suppose the dividend is like 3% and then the share price moves 10%. You could just sell on the market.
Yeah. You could just sell. You don't even need the dividend at that point. Yeah.
Yeah. And then look at that. You now have some more cash, and then you could put that back in. And it was interesting because then going on to the full year 2024, CPFV was still up there apparently. They were at 8.32%. Carreras was still second. Carreras is one of the ones that, if you notice, over the different time periods, the year to date,
top 3.
2024, it's top 3. Their CPFV is top 3 for 3 of them, but not for the 10-year. Another interesting one was Salada. Did you know that Salada was such a big dividend payer?
No, actually.
Apparently over, if the data is correct, 2015 to 2025, the last 10 years, it paid over 162% in dividends.
Wow.
Yeah.
That's actually crazy. Is it that they haven't been paying high dividends recently? Because
I think it's also maybe the share price where it's at now. Because I mean, if it was trading at a lower price now, then but same level of profitability.
If it's a lower price now, then profitability and dividends would be one, but share price would cause the yield to go up if they had the same payout. So maybe they've fallen
it was below
off.
$1 back in, I don't know. But yeah, I found that interesting.
Salada's last dividend was earlier this year. They paid a dividend. The record date was June 4. Payment was made on June 17th.
So they paid 2%.
Yeah, the yield
so far for 2025. Yeah, well, look at
2% 2025, and they normally pay dividends twice a year. So Q2 and Q4 for them. So we expect another dividend 6 months from now.
You know what's funny?
What?
This is a side note. I don't know. You meant how I think people, for example, view a company like Carreras kind of negatively, right? Because they're selling cigarettes and
aren't you a doctor?
Yeah, hold on. And then people say, okay, cigarettes are bad, and they are bad. They're bad for your health. They increase your risk of heart attacks, strokes, cancers, all kind of stuff. But I was just realizing that, something like coffee, coffee also is something that people kind of, abuse. And it's not that I would say coffee, almost anything can be bad for you, like if you reach a certain point. But like coffee, for example, coffee can affect your sleep. You can get kind of dependent on it. There are people who drink coffee every day, like they have to have their coffee. If they don't have their coffee, it's like they're You know what I'm saying? What's the difference? So like, have you ever heard of someone that views Salada negatively? That they're like, oh no, they're the coffee manufacturer. Like what? No.
I get where you're coming from now. I get your reasoning. But
Yeah.
if I were to judge both based on the level of how toxic it is for your body, I mean, comparing caffeine in coffee
Mm-hmm.
to
Mm-hmm.
nicotine and all those other carcinogens, I get it. There's a much more negative view towards cigarettes and so on.
Mm-hmm.
So I get it because, you know, caffeine is a mild drug. If I were to put, like, I wouldn't put
Mm-hmm.
anything that's in a cigarette over caffeine. I wouldn't
Mm-hmm.
put alcohol even. I think caffeine is one of the more mild. Yes, obviously it has effects on you, especially on your cardiovascular system, your nervous system, etc.
Mm-hmm.
But I see why people have a more negative view towards Carreras versus to Salada. But your point is definitely taken, definitely valid, definitely taken.
Mm-hmm.
It's a drug that people don't even realize that, you know, drinking coffee, you know, there's a drug in
Mm-hmm.
it. It's caffeine. It's what makes you feel
Yeah.
good.
I remember like a few years back when I was I was in a bad habit of like staying up a bit late. And so I would stay up late and then I'd have to wake up, I'd be really tired. And then I would try to like drink coffee some mornings. This was like in med school. Maybe this was maybe third year or like fourth year or something.
Oh, when things
probably
hit the
third year.
fan.
It's probably third year. And
we're on the ward in the day, so we no longer have enough study time. Okay, I remember that.
So I was in class, and then there's a cardiologist who's like a heart doctor, and she's a pretty good teacher too, very nice lady too. And we're in class, and then they were talking about, I think, arrhythmias, which is like when you have an abnormal rhythm to your heart, so it's kind of beating like offbeat, which can lead to a lot of issues in your body. And they were talking about risk factors for arrhythmias, and they were going into some of people were answering the different types, and then someone said caffeine, and I was just like, what? And like caffeine, what? Like I thought caffeine was like harmless. I was like, this is harmless, isn't it? Like, and they're like, no, you can get arrhythmias with caffeine, and I was just like, whoa. And I was like,
I have
that
friends that
day,
can't
I think
drink
I
it.
stopped drinking coffee for a while, bro. I mean, I did go back sometimes, but it's like I'm very, a lot more mindful. No.
I mean, I even have doctor friends that can no longer drink caffeine because they found out they have an arrhythmia. You know.
Oh wow.
So yeah, I mean, it's so funny how a lot of medicine things, like being in medicine, you see, you know, a different perspective on life, and you have a different perspective on the things that can alter things within your body and how things make you feel and so on. Because the same thing that you speak about with caffeine, I could speak about even with, same with caffeine. My sleep is not the same every time I drink coffee, right? So I have the smartwatch and so on, and I love to track my health data. Love to track that. So one of the things I realized while drinking caffeine is I don't spend enough time in core sleep, and REM sleep is increased, which is the rapid eye movement. It's the part where you dream and so on. It's not really the restless type of sleep and so on. So I wake up in the mornings feeling tired as well. And that's so, for me, that's counterintuitive. But you know what I do when I wake up feeling tired? I drink coffee and the cycle repeats. So I've been a lot more mindful now about that. So it's just funny how you
it's
have a
hard
different
though.
view on it.
Like
It is
sometimes if
hard.
you have a responsibility, should you go there being like, oh, I'm so tired, or do you have to kind of just try to wake up and push through?
Yeah, because you still have to see these patients. You still have to give it. Sometimes you have rough days and you need that little boost. But some people would say, but it's bad for you, doc, and blah blah. So for me, caffeine, I'm on the fence with it. I see why it's necessary. I see why a lot of doctors drink it. So a lot of people just generally drink it. People in the finance industry, it's not just coffee. Because right now, sometimes if I need it, I don't necessarily drink coffee. There's some caffeine pills that I have that I got from, I think drug reps give it is Cafe Mint. Yeah, I guess that's free advertising for them, but it's less caffeine than a cup of coffee. That's one, and you know the exact dose that you're getting. For me, it's much better than drinking coffee because I don't need the added calories. I don't need all of those added stuff, and I don't want as much caffeine that's in even a teaspoon of coffee. So it's
but
perfect.
It still is enough to wake you up.
Yeah. So it's a milder version. So by the time it's in the evening, I feel better.
Oh, interesting.
This is a mad tangent. I'm sorry for anybody that's listening to our rambling, but if you guys are still here, true fans, big up.
Yeah, because what I had done at one point, like I remember if I was, say I was like post call and I was like really, really tired, but then if you sleep in the morning or the afternoon, it's gonna make it hard for you to sleep in the night, and you want to go back on like your regular cycle. So it's like your goal is to not really sleep until it's your usual bedtime. And so what I used to struggle with that. So what I started doing was taking like double shots of coffee, because I'd have the double and then I'd be able to push through. Like if I just had a single, it wasn't really enough. It's like I saw someone once do the double and I was like, "Whoa, you can get double?" And he's like, "Yeah." And I did it.
You can
and
get
I was
quad.
just like,
can get quad shots, bro. One time I tried it and I couldn't finish the quad shots. I was just like, yo, let's just throw this away.
Because I will get tremors though.
Oh, I get nothing.
I get tremors if I have too much. So that's a sign. I'm just like, I shouldn't. That's not good. But hey, no one hates on coffee companies, right?
Yeah, babe. No one hates on coffee companies. And Salada, I mean, I like their products. I like some of them. Yeah, because they own Mountain Peak. So I do like the instant packets.
I went to their shareholder meeting, I think last year, and there's this I actually bought it sometimes, I used to add it to my shakes. It was like the pumpkin ginger spice, something like that. I won't actually say it.
Yeah, man.
You tried it?
I know exactly which one. Yeah, bad.
It's a new thing though, right?
Not necessarily. What do you call new? I feel like it's been around for
turmeric latte pumpkin spice.
I don't recall turmeric being in that.
Golden turmeric pumpkin spice latte. Yeah. So I was actually adding this to like my shakes. It was pretty good.
Okay, I've never had that one.
Yeah, this one is good. But yeah, I don't even remember how we got to this. I think I was just saying that Salada is one of the standout ones. I found that interesting. I've never, I don't think I've actually ever owned Salada stock. I mean, some depends. I guess to my detriment.
They did a stock split, I believe, didn't they? Like in 2021. Yeah, because I remember the stock running, man. That stock was running.
I don't even think I understood splits then, so I had no idea what was going on. It was like people were talking about it, and I just started, and I was just like, "What the heck is that stock split? Like, what do you mean? What's going on?" Da, da, da.
Yeah.
Yeah,
that's kind of crazy. I'm actually looking at it now. It was $2.90 averaging, in COVID time, and then it started running to as high as right before pre-split was $6.66, and it's still been going strong.
Yeah. Another interesting one, right, that I do get is on the list, Dolphin Cove. So Dolphin Cove was 10th on the 10-year period, 4th on the 3-year, 5th on the full year, and 6th. It's top 10 consistently, which is still pretty good. Because I was even having an interesting discussion with a friend. Like I was telling him that, Dolphin Cove has, a pretty decent dividend yield, But then he was like, yo, couldn't have couldn't a hurricane just mash up the business? And it's not like he's wrong that a hurricane could affect them pretty heavily, especially because I think most of their, or if not all of their branches are in Jamaica, right? I think all of them are in Jamaica. So if there was a major hurricane and they will get some damage, you know. But
that's almost any company, isn't that
yeah,
true?
that's true. But I think he is more saying because they're right on the coast, and then with the water, like there could be like some waves, or I think that was his reason also why.
A major hurricane did hit us very last year.
Yeah, I said that too. I was like, hey, but I mean, we have had that before. It's not that. Yeah.
And
and the other thing I guess I was wondering.
Who got hit? All banana trees were flattened.
JP,
Jamaica producers.
Yeah.
So I'm just saying, like, that same notion that a hurricane could. That's the same risk you have to factor in for a lot of companies. Look at insurance companies.
Well, to me, it was more just, that's just a risk he's maybe not cool with.
Fair.
It's not I'm not gonna like convince him and say, yeah, man, you should buy this, because at the end of the day, that's why two companies, even they could be paying you the same yield, and in a way you could have similar fundamentals, like balance sheet and their debt or whatever. But if someone just like we say, Salada, someone doesn't like coffee drinkers, someone don't like smoking cigarettes like Carreras, someone doesn't like a company that allows people to swim with dolphins, and they just wouldn't buy it, and they should buy like another one. So it came back to also it being, I guess, personal. So maybe some people don't like Supreme Ventures. They pay pretty consistent dividends. I mean, there could be some people that don't, as much as everybody's favorite stock is Trans Jamaica, aren't there people who maybe hate highways? And they're like, we shouldn't have highways. They break up, like, maybe there are people who hate highways. Maybe there are people who hate
environmentalists. When the highway was just built,
you had to damage, you had to knock
down
trees, you had to do things like that.
Yeah,
animals, they were,
and lots of animals were hit because there was improper fencing and so on, and probably cuts through the flora and all of that stuff. So people are like, I could see that. I could definitely see that.
The only thing, though,
my thing to that would be, just buy the stocks you like. I agree.
And it's not just that, because you have to remember also, it's not like, I think something that kind of confused me in the beginning, like in the earlier days, was thinking that like a lot of companies, like if Fontana's share price was 10%, 50% higher right now, it's like that doesn't necessarily really affect. That's not necessarily good for Fontana. Like Fontana, the company, or even the shareholders of the company, they may not even actually care. It's almost like, you buying the stock, going out and buying Fontana stock when it's already listed doesn't. Or no, I should use another example. Say you hate coffee drinkers. You're like, hey, I think coffee is horrible. I'm not going to buy Salada stock right now, even though, I think I could get a 10% dividend yield, and I want a 10% dividend yield every year, because I don't like coffee drinkers and I don't want to give them any of my money. But you're not giving them your money. You are just owning their shares. It's not like they are creating new shares, raising more funds. If the company is already listed, they've just listed on the exchange. So they took some money from some other people. They're now listed. You can freely trade their shares. You buying the shares right now in the market doesn't really benefit Salada. There's not that many companies where things like that could actually benefit them.
Yeah, that's the same thing we keep saying. Like, not many companies really care about the share price. It doesn't matter to them. But what a lot of them care about is their dividends. And the reason they care about their dividends is if they own a significant portion of the business, they clearly would get paid a significant dividend. We all have the same yield, but the money reaching Leechen's bank account when NCB pays a dividend and the money reaching my bank account are two different money. We could have the same yield. Well, we don't have the same yield because we bought at different, different stock prices.
So you bought?
But if we, no, sorry, this is hypothetical.
So you sold?
It's all hypothetical. This is all hypothetical.
So hypo, so it's low, so you sold. Okay, cool.
Yeah, precisely. Good maths. Yeah, man. But if that's the price, if we all bought at the same price, right, the money going to his bank account is clearly way more. So I think a lot of people that care about dividends, you have to look at, who is in senior management, who owns the company. Does the CEO own a lot of shares and so on? Because they likely do care about their dividends. And so they'll run that company very well and make sure they're consistently profitable or getting more profits so that they can get a nice payout at the end of the day.
Or just run it so that it's consistently paying dividends.
True. I think the reason I used to say this all the time, the reason I invest is in stocks. I mean, a lot of people are also anti-capitalism, but we live in a capitalist society, but they're anti-capitalists and whatever. And they hate billionaires and rich people and so on. But I'm like, yo, if these billionaires are making money, I can't necessarily do anything about it. Maybe I can boycott their products or whatever, but I can't do much about it. But what I'm going to do is profit off of them making profits too. So I'll buy in hopes of him paying himself a big dividend because he have to pay me too. Me a shareholder, I have to get paid as well. So I look at things like that with the stock. I would say though, in terms of, go ahead.
I was saying some of the other ones that kind of stood out to me was like Guardian too. You meant Guardian is getting quite a decent yield year to date. It's at 5.58%. That's pretty.
Wow.
Yeah.
I actually did not realize that. 5% yield. How often does Guardian pay dividends?
I think it's twice a year.
Because then NCB is getting a good food. No wonder they don't want to give up Guardian.
This data is actually now saying 7% based on the current 7% based on the 2 dividends paid this year. Oh wow.
Wow.
Yeah, so it's actually higher. I guess this was before it was declared.
They paid a dividend in May of this year. And then I'm seeing another dividend in June of this year. Hold on. Something is not adding up.
Yeah, it's just I still wonder about how people view, because it's like at $300 now, right? It's like I know there's that barrier for a lot of people. It's just like, even though, insurance business, in an area that needs insurance with a lot of different, I mean, even them, you could mention the hurricane issue with them though. If they had, when you have major hurricanes, they have to pay out,
Bro, are you medsing Guardian's dividends right now? They've paid 3 dividends this year that I'm looking at? Pending payment record date. So they've paid 2 in Q2. And that amounted to $17 per share. Yeah. Record date, 1 in May and 1 in April. Payment date was 2. I'm seeing 2 payment dates. The payment date was the 7th of May 2025 and one was the 20th of May 2025. 7th of May. And a record date. Okay, wow. I need to do some more deep dive on this because why would they have done that? Was it an interim dividend? Of course it was. Was it? I don't know, man. I need to come off air and look at this, but this in the context of NCB and what's going on with NCB is pretty significant. If you guys want to see what we talked about with Guardian and NCB, we did that in a video call about leverage. You can find that on our channel. That was a really good and fun episode, but Guardian paying multiple dividends in the span of a month. Yeah, I think it is interesting, Preston. Thank you for giving me something to research after this.
Yeah, that's interesting. I just realized what you're saying. So here you have 7th of May. And then you also have them saying 11th of June. And then the one they're paying 11th of June is 21 TT cents. I don't know how much. I'd have to work out the Jamaican. And then 50. Well, the second one wasn't as big though, but it's like a third, the initial one.
Yeah.
Mm. Yeah. What else was there from this one?
But in a
I think those
month,
are most of the ones that kind of stood out on the list, though. And
but there's an expected dividend again from Guardian too. Another one.
why do you say that?
Well, I mean, they paid one in that same time in Q3 last year,
But they paid an earlier
and
one now, so I don't know if that means that they'll do a Q3 one. Maybe this is the
it was
Q3 one that they're just paying out earlier. Not to say that they could still pay a dividend later this year, though.
yeah. I'm just wondering. Okay, something I need to look for.
Who, if they vote at the board meeting, who is the board? You know, that's just who is actually the board. Do you know? I don't know.
Of Guardian? No, I'm not sure.
Yeah, I assume it's
I'm pretty sure. Yeah, it should definitely have some
NCB.
NCB. Okay,
Robert
something to
Almeida,
yeah.
he's chairman. Ian Chinapu
China pool,
is the
yeah.
CEO. Michael Leachin is a board member of Guardian, so you know where we can vote if he wants a dividend. I'd have to go through these other names. I don't know if these other names are standing out to you. I'm sure if you were to look at it, it's probably affiliated with NCB somehow.
Yeah. Huh. I see some names I do know, yes. Oh, Lockjack too. From way back when. Lockjack,
But
those were the initial owners.
of Guardian?
Yeah, those are the people. Yeah, they sold their stake to
To
NCB. A decent portion of their stake to NCB.
See?
Yeah.
But yeah, that was there anything else you stood out to you about this?
Well, Signos paying dividends, they've always kind of been known to pay a lot of good dividends. I think they're pretty consistent with their payments and based on their business model as well. You know, it's still all dealing with cash. It's still like, the loans, and then they have to get paid. They probably get paid monthly from a lot of the companies that they give these loans to. So it makes sense for them to also be paying regular dividends. And their dividends, I think, are not taxed because Signos isn't domiciled in Jamaica. So you don't have to pay that 15% to the Jamaican government. So, you're getting a decent dividend amount in terms of, so all dividends, if your company is registered in Jamaica, there's a 15% dividend tax, which some people say should not be there because you basically getting taxed twice because you pay your tax, in the income statement, you have that tax line on your profits. So they're taxing your profits and then you're paying a dividend from your profits and you're taxing the dividends. So people say there shouldn't be because it's double tax. I get it, but yeah, a lot of people like Signos because you don't have to pay that 15%. I'm not sure if where they have any dividend tax or if it's 1% or something like that. I know it's very small if it does exist. So Signos being up there doesn't surprise me. Definitely doesn't surprise me. I was looking to see where Transjam was because was that also high as well on the list? Because people buy Transjam because they pay dividends and because they pay good dividends. Last year they paid 2 dividends.
Transjam was 10th for year to date at 3.43%. And yeah, that was the only one out of the more recent.
Well, I think their stock price has fallen now it's been settled at around $3.60. So
interesting.
Let's see. I'm looking for have they dropped their reports?
I think they did.
Yeah, they did. They did.
Yeah,
I need to
August
look through
8th.
their report. Oh, that was yesterday. Okay, I need to look through their report because I wanted to also see. Remember how I said, you want to see who is top 10? I kind of want to see who is top
it was
10.
the National Insurance Fund,
Insurance fund. Look at that.
Yeah.
I'm actually just seeing it now. Muson is still up there. Okay.
Muson sold a lot. 252 million units.
I'm surprised he's still there. I mean, is he still
how much
high
money
up,
is that?
like fifth? How much? Boy,
it's like
I have no idea. What price did he sell at?
750. Wait, who is he?
Did Muson sell at? Sorry.
Oh.
Yeah.
Well, I guess it's over like $3 or so. It's been trading. Yeah.
So if you multiply that by at least 3, yeah, probably 4. At least 360.
No, I doubt it in terms of the volumes. But yeah, I don't know if there's anything else you wanted to mention.
No. I think this was a really good episode. If I'm being honest, I love talking about dividends because for me, it's telling me, all right, Thaon, when you start get your money up and dividends really and truly matter, these are the episodes I'm coming back to. So, but yeah, no, I think dividends are pretty important. I definitely think dividends are pretty important.
What was the company that paid you the recent dividend?
Oh, I forgot to say, thank you for reminding me. I know JSE paid me a dividend earlier this year. I can't remember what
they're paying another one.
Yeah, that's the one I wanted to talk about. Yeah, because they met recently. They had a consideration meeting too, and I think it was because they're normally paying them their Q2 and the Q3, so they did that last year at least. Not normally, let's say they did that last year, and this Q2 this year was higher than the payment last year. So, and when you look at their profits, I mean, it's not the Q2 they've fallen off a bit, but I don't know. I guess we'll see. We'll see. But I'm still expecting a decent like a dividend. So who knows?
But hold on, they actually did declare it though, so isn't it?
When did they declare
said expecting? Recently. Yeah, they declared. Wait, the JSE is saying.
JSE.
Yeah, JSE did declare one on July 30th. The notice came out.
Oh yes.
That one is not that high a yield, 1.59% based on the current price. Yeah. Well, how did we get to JSE? I mean, you were saying
that's the one that paid me I remember it being one of my last dividends.
Oh, okay. I get
but
you.
This isn't bad because when you compare this to last year's yield at this time which would be when they would pay it out, their Q3 was 0.62%. So comparing 0.62% yield last year to 1.59% this year, I think that's a significant increase. That's more than double. So yeah, it looks good. It looks good. I will say that. But yeah.
Okay.
Yeah. Anything else you want to leave with the people, before we close on this dividend episode?
No, I think the whole dividend talk was interesting. I remember I was even reflecting. I was reading over. You said you read the book Confusions. Was it Confusion? The Confusionists or something like that?
No, I haven't
Confusions
read it.
of Confusions.
I know it though.
Yeah. So there's a part that I was just reflecting on a bit.
Ancient book, hundreds of years ago. Yeah.
Yeah, because it was. Do I still have the? Hold on. Like I was reflecting on the Prince of Business, that term that it uses about like the different types of investors, and I was kind of just trying to read into it a bit deeper. Yeah, I want to try to show it. Like I was talking about the different, because I guess it comes back to some of the points you were saying about like with the whole dividend investor thing, that if you're someone who you make a good amount of money from like the dividends of a company and you don't even have to run the company, you could just do other stuff and the company will be run by other people and you don't even have to really think about the business that much, I guess. Like, yeah, you should still check up on it as an investor, make sure they're not doing foolishness, but it's almost like, okay, I can actually trust the people that are running it or whatever. And you could just get the dividends from it, and those dividends are meaningful for you in your life. That's like a flex.
I
Because
found
why
the
would you
quote,
have,
by the way. Yeah, from the book. It says, "The princes of business belong to the first class. Every year, the financial lords and the big capitalists enjoy the dividends from the shares that they have inherited or have bought with money of their own. They do not care about movements in the price of the stock, since their interest lies not in the sale of the stock, but in revenues secured through the dividends. The higher value of the shares forms only an imaginary enjoyment for them." So they really just care about and this is the confusions in 1688 by Joseph de la Vega. So yeah, it's so relevant to today, if we're being honest.
And it'll
It's
be
like super
relevant till
relevant to today.
tomorrow, 10, 20, 100 years later. Always things will be same as ever.
100%.
Yeah. So yeah, that's the goal. Because like I was just thinking, because like this year I've got some dividends that, I was kind of like, I was able to do something pretty nice with it.
Yeah.
And, I think that was cool because I wasn't in it for the dividend, but I got, I just got a dividend and I was like, hey,
Nice.
I could do this. Yeah.
But when you made some dividends, you realize you can buy a house.
Yeah.
That's the goal.
Yeah, look at that. And it's like, imagine just doing that. And then you're like, okay, this year, this dividend is going to go to that or I'm just like, wow.
Do you remember when we first calculated, we first were looking at dividends? I'm trying to remember what company it was.
I think it was
it maybe Proven?
was one of them.
Yes. I think this was in 2019. And you looked through top 10, and I think you saw Peter Bunting. And Peter Bunting made house money on certain dividends. It was like, at the time, we were thinking like 30 mil he would get per dividend. And we were just like, yo, this man is just living life. And one day he just expects to see 30 mil in his bank account, maybe quarterly, or maybe, twice a year and so on. But you realize that's a significant, when my money is up, that's the kind of dividends I want. I don't want no play, lunch money. I want house money. Yeah, man. And boat money. Yeah. So I see why it matters to a lot of these guys, because they probably, their cash flow, their lifestyle probably depends on these dividends. So, yeah. But guys, let us know what you think about this episode. Is there a company that you love when they pay you a dividend? Let us know in the comments down below, and what dividends have done for you. Thank you guys. Hope you really enjoyed. Please like the video or subscribe if you loved it. Thank you so much. Limitless out.
Peace.